So guys, let's begin the 800 series revision class. And I know many of you are waiting for this particular revision class, 800 series especially. Okay, but before watching 800, I request you to finish audit report topic and then only watch this. Don't directly start with 800 series revision, because audit report topic is basis for entire standards discussion, especially 8000 series, 2000 series, most important audit report. Audit report without understanding 800 series, you can't comprehend it. Fine. Now, like many students are worried on 800, 805, 810. Sir, so much of amendment happened. What happened? Nothing. The amendment, if I tell you, you will laugh. The amendment that happened in 800 and 805, main amendment is the audit report format is changed. The main amendment that happened in 800, 805, 810, the main amendment is audit report format has been changed. Just 1 minute. Just 1 minute. Yeah. Yes. So, by the way, so audit report format has been changed. That is one major amendment. Another amendment that happened is, earlier, no, in 800, they used the word one exception, excluding internal financial controls over financial reporting. That is now removed. Indirectly, 800 scope is now extended to cover IFC also. Generally, we auditors give on adequacy and operating effectiveness of internal financial controls only as part of general purpose financial statements audit. We generally do not give opinion on IFC. We generally do not cover IFC reporting requirement as a part of special purpose financial statements. We all know entire 800 series is talking about special purpose financial statements. 800 is talking about special purpose framework, whereas 805 talking about single financial statement and specific element. 810 talks about summary financial statements. Okay, so IFCs all these days, we think what, before this 800 got amended, it is applicable only in the context of general purpose financial statements. There only we give opinion. Whereas in special purpose financial statements, the standard itself originally excludes that. Which one? IFC. Now that exclusion is removed, therefore now 800 standard, as a part of 800 audit, when you're doing special purpose financial statements audit, you also can give, if terms of engagement specify, you may also has to give opinion on internal financial controls over financial reporting. That is one amendment. Only these two amendments. Third one more amendment which they brought is emphasis of matter paragraph. In SEI 800, no, earlier we may not use emphasis of matter paragraph. There is something called basis for accounting section in the old audit report format of 800. I don't know how many of you are able to comprehend this. That's why I'm telling you, audit report is fundamental for understanding 800 series. Okay, without understanding audit report topic, if at all some of you are reading 800 series directly, if at all without reading audit report, you are doing a big mistake. You are doing a big mistake, I'm telling you. Audit report without understanding, because no, the reason why 800 standard itself is changed is to comply with the 700 standard, guys. To comply with 700 only, 800 standard has been changed. Okay, fine. So, emphasis of matter paragraph is compulsory now if you are giving an audit report in accordance with 800. If at all you are giving an audit report on, special purpose financial statements, emphasis of matter paragraph is compulsory, where you have to talk about basis for accounting. Fine. Don't worry. I understood. Some of you are unable to comprehend. Don't worry. First, let us look at 800 original audit report format as per the pronouncement book of ICAI. Don't worry. I already told you where you can download all this in the part 1 video. I mean, at the introduction to audit report itself, I told already. You see, this is one of the illustration, an auditor's report on complete set of the financial statements of the entity, okay, other than listed entity, which is prepared in accordance with financial reporting provisions of a contract. By the way, before I further going to, we all know the frameworks, the financial statements of an entity are either prepared using general purpose financial statements or special purpose financial statements. Any of this can be used, yes or no? If special purpose financials means what? Special purpose framework. Our entire standards, right from 200 to 700 series, all these standards predominantly by default talking about general purpose financial statements. Suppose if at all I am doing audit of special purpose financials, means the client prepared special purpose financials and they appointed me as an auditor for special purpose, then 800 standard also applies. For your information, if you see 800 standard heading, if you see, for your information, 800 standard heading, if you see the heading of the standard, special considerations, audit of financial statements prepared in accordance with special purpose financial statements. If audit of financials, okay, which are prepared in accordance with special purpose financials, what you need to do? Specially what you should consider, which means when you're auditing financial statements which are prepared using special purpose framework, specifically what you should consider only 800 talks about. Generally, what should I consider? If at all I am auditing financials prepared in accordance with special purpose framework, special purpose financial statements audit, generally what should I consider? Here 800 talks only about special considerations. General consideration it is not talking. Sir, if I am auditing financial statements of special purpose, if I am auditing special purpose financials, generally what should I consider? Same 200 to 700 series is applicable. Most important observation, when you are auditing special purpose financial statements, you have to still follow 200 to 700, all the guidelines you have to follow. Specially anything else that you need to follow? Yes, 800 will tell you what specially additionally you need to follow. So 800 is exclusively applicable for special purpose financial statements. Whereas the standards on auditing that we learn right in our normal auditing standards is 200 to 700 series. They are applicable predominantly for general purpose, and these principles can also be applied on special purpose financial statements. This is point number one which you need to understand. Without understanding this, you cannot understand 800 series. How many of you you really observe this point? I'm not sure, but if at all you learn something new point, just put it on a chat box or below comment as a video. It will be, your appreciation really matters. Okay, fine. Now look at, so first I will directly show you. Let us do one thing. I will not even discuss 800 first, because 800 I will come back at last. First I will discuss 805 standard. Right now whatever I gave is okay, we'll do one thing. We'll continue 800. We already started. No, we'll continue. Why to disappoint you? Fine. 8 illustration 1. Remember, between 800, 805, 810, 800 is only appears little tough because of the terminology used, special purpose financials, all that. Whereas 805, what is 805 actually talking about? 805 is talking about single financial statements. It is actually talking about single financial statement or specific element which may be prepared using general purpose framework or which may be prepared using special purpose framework, doesn't matter. But there it is a single financial specific element that may be prepared using general purpose framework or special purpose. Suppose if the single financial statement is prepared using special purpose framework, then 800 is also applicable. That's what the main point. Further, 810 is dealing with what? Summary financial statements. Okay, summary financial statements are generally drawn from general purpose financials, or summary financials may also be drawn from special purpose financials. If at all summary financials are drawn from general purpose financials, 810 plus remaining standards you have to keep in mind. If it is drawn from special purpose financials, 800 also you should keep in mind. Remember, 800 is not a substitute for remaining standards on auditing. 800 is only a complementary standard. That's why the standard starts with what? Special considerations. That's it. This is the basic introduction to enter 800, 805, 810. Now let's enter into the actual standard. Now before I start the actual standard, I just want to show you one audit report. You see how the audit report looks like on an 800. This is the report where this is the amendment. Yeah, this is what the amendment in 800, not something easy as all the prepositions. Many students are, when I see amendments book on 800, what are all highlighted in 800 amendments is not that is not significant at all. The significant amendment is audit report format is changed. contents of audit report has been changed. That is a major amendment in 800, guys. Please come out of any particular any other misguidance that you are having, if at all. See the old audit report format of 800. This is a new audit report format of 800. This is now aligned. This audit report format is now aligned with the 700 format. Earlier 800 audit of special purpose financial statements, when we give an audit report on special purpose financials, we used to give as per 17-18 before. Up to 16-17 financially, we have old audit report format where introduction we will give, then management responsibility, then audit responsibility, then opinion, then basis for opinion. Like that we will give old format. Whereas from 17-18 onwards, SCA 700 is revised, where first you will talk about opinion. That amendment which happened in SA 700 in 17-18, right? Corresponding amendment they brought in 2024 in 800 series, which is now applicable for the first time for May 25, September 25, Jan 26 exams of CA final. Okay, straight away opinion. Same, we have audited financial statements of so and so. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are prepared in accordance with provisions of a clause. This is what the framework, this is what the special purpose framework. Here financial statements of the company were prepared as per provisions of a particular clause, particular thing. That is what the main basis. We conducted our audit as per standards on auditing. You see, they simply said standards on auditing. They didn't tell you 800 clearly. Means all the auditing standards will apply even when we are doing audit of special purpose financial statements. And our responsibilities are further covered under audit responsibility section. We are independent of the company. We have fulfilled code of ethics. We believe that our evidence, the evidence obtained by us is sufficient and appropriate. My dear guys, the same content is what we even covered in audit report topic, reporting chapter 700. Same exact format. Go and check. That's the reason I'm asking you to first watch audit report reporting topic. Okay, do not directly jump into this particular 800 topic. Now, emphasis of matter para. The next one is what? Emphasis. This is one important paragraph, most important. This is one major amendment. Right now, the 800 standard says you must compulsorily use one para called emphasis of matter. This is also called as alert paragraph. Under this 800 standard, this is also called as alert paragraph. Why? In the audit report, we have to compulsorily highlight on what basis the special purpose financial statements are prepared. What exactly the special purpose in that? Company, when they prepare special purpose financials, in the notes to account, they will clearly mention what is the basis of accounting. Exactly. So, that basis of accounting would have been already highlighted by the management, right? You should highlight that in the audit report. We draw attention to note number, and at the end, you see, our opinion is not modified here. So we are just highlighting what is the accounting method they followed, what is the basis for accounting for the special purpose financials. We are just highlighting that. And you see here, we not only highlight basis for accounting, we also talk about restriction on distribution and usage. What are we talking about? Our report, you see, our report is purely this, our audit report we are giving, right? Independent audit report on special purpose financials. This is only for the company and other company, should not be used by other parties. And so we are alerting people, others don't use. This is exclusively prepared for the company. Means we are telling that this audit report and the special purpose financial statements are restricted for distribution. They are not meant for public distribution. They are not meant for everybody usage. That alert we should highlight in the audit report. This is compulsory. Remember, sometimes restriction on distribution and usage may not be required. We will discuss that also in the 800 topic. Then finally we will talk what are management responsibilities and what are auditor responsibilities. Auditor responsibilities are again exact same as it is, which is covered in 700. Responsibilities of auditor is divided into 3 sections: primary responsibility, additional responsibilities under SA, and communication related responsibilities as per 260. Finally, the firm, signature of the auditor, UD number, membership number, place of signature, date. That's it. This is how audit report on special purpose financial statement is amended, because of which Institute amended 800 series entirely. Audit report formats were updated in 800, 805, 810. In all the 3 standards, audit report formats were updated. This is the major amendment. In 800, earlier, the scope, what is the scope of 800? We used to audit special purpose financials excluding IFC. IFC we don't report. Now that exclusion is removed now. By removing exclusion of IFC, now when you're doing audit report, when you're giving audit report on 800, you can also give opinion on internal financial controls if terms of engagement require. That's it. Now look at the actual standard. So what is the scope of 800? What are the matters that are addressed in 800 standard? They talk about accepting, how to accept the engagement, how to plan and perform the audit, how to form an opinion, all that. So 800 is talking about when you can accept this engagement, how to plan and perform this engagement. So first of all, what is the meaning of special purpose framework? What is a special purpose framework? General purpose framework means what? Special purpose. I already requested, at the time of reporting chapter beginning, kindly watch CA Inter fundamentals time step. I told you to watch CA Inter marathon fundamentals topic. I requested everyone. There I clearly spoke about what is general purpose, special purpose. Once again I will discuss. What is a special purpose framework? It's a financial reporting framework. How it is designed to meet needs of a specific user. Very simple. A third party company, for example, you want to get a loan from a particular bank. Okay, and the banker has asked you gave them all your last 3-4 years general balance sheet P&L, general purpose balance sheet P&L, you gave them. They accepted it. Banker also requested one more balance sheet P&L. You know how? Sir, please prepare last 3 years balance sheet P&L on cash basis. They asked me. For example, they asked you. The company is requested by the banker to prepare balance sheet P&L using cash basis of accounting. Generally, is it generally accepted policy for the company to prepare on cash basis? No. But now for the purpose of banker, they are preparing on cash. Now banker has given one guidelines on how to prepare financial statements using cash basis. What methods of depreciation they need to follow. What methods of revenue recognition they need to follow. Banker given the guidelines. As per the guidelines the company has to follow. This is called financial reporting framework of a specific user. Getting it? Now this framework, banker, that can be a fair presentation framework or that can be a compliance framework. If banker tells you some rules and tells the company prepare financials exactly as per this, don't deviate at all, then compliance framework. Suppose if it tells the company, banker tells the company, please prepare financials as per these rules, and gives flexibility. If some of the methods of depreciation, methods of accounting and all is not suitable for the company can choose suitable methods accordingly. That kind of flexibility is given by the bank. Then we call it as fair presentation framework. Then what do we call it as? Fair presentation framework. Now, so special purpose framework, no, this is the one which determines form and content of the financials. What exactly constitute complete set. Banker will tell you whether he want balance sheet P&L notes or he want cash flow statement also. Banker will tell you what exactly the complete set of special purpose financial statements. The special purpose framework only will decide. Okay, next examples. We have given examples here. Preparing financial statements as per cash basis, preparing financials as per contract, all that. What is special purpose? It is for specific user. General purpose will answer general purpose financial statement, general purpose framework, no, that will address financial information needs of wide range of users. And what is financial statements exactly in a special purpose? The term financial statements in this SCA refers to complete set of special purpose financials. What is complete set of special purpose financials? What is complete set? Generally, for general purpose financials, what is complete set? Balance sheet, P&L, cash flow statement, changes in equity, notes to account. This is complete set. For special purpose financials, what is complete set? Determined by the specific user. He will decide what exactly complete set. You and me cannot argue on that. Then obviously financial statements by default include related notes. Then now the most important part of the the standard is this is one. Of course this is important question. Of course, by the way, there is no change here, man. Whatever is there in the old 800, the same 800 is the same content is there. Even here also this entire content, meaning of SPW, what are the areas addressed, everything is almost the same. Now considerations when planning the audit, this is also same only. I told audit report format alone is the major change. And in 800, no, earlier scope and objective is there, right? Scope used to exclude IFC. Now IFC is also covered as part of 800. Of course, IFC we will give opinion only when client requests us, only when the terms of engagement request us. Now first of all, in 800, 805, 810 and even in our SCA 210, if you recollect, 210 standard, you remember CA into terms of engagement? In all the engagements that we accept, no, whenever we are accepting an audit engagement of anything, general purpose financial auditor, special purpose financial auditor, single financial statements audit, summary financial statements audit, you should always see whether the framework is acceptable or not. The company prepared some financial statement, right? Complete set financials, single financials, special purpose financials, specific element, summary financials, doesn't matter. We as an auditor first see on what basis they prepare. Is that framework acceptable? That you should check. What is an acceptable framework? What is an acceptable framework? Very simple. In case of special purpose framework, user's requirement is the key factor in determining acceptability. Now company prepared, financial statements as per cash basis. I'll ask the company, how you prepared? Sir, banker gave the instructions, sir, exactly as per that they prepared. Then that is acceptable framework. Suppose banker gave some methods, company is following some other methods. Banker clearly said deviation is not permitted. Company deviated like anything. That is not acceptable framework. If at all special purpose financial statements are prepared by not using acceptable framework for them, I will not accept that audit. I will not accept that engagement. Further, applicable financial reporting framework, the special purpose framework, the special purpose framework may be set by authorized standard or recognized organization. Right now, nowhere in the world there is a recognized body for special purpose financials. But considering the future needs, the standard itself initially addressing. Sometimes maybe in future, a special purpose financial statements related body might be established. If at all, they gave any guidelines for special purpose financials, that might be acceptable framework. It is presumed acceptable. If at all there is any standard setting, if any recognized or authorized organization for special purpose financials, then that is also presumed to be acceptable. Sometimes special purpose financial statements may be a requirement in a law and regulation. If at all the company is preparing special purpose financials as per law, for example, best example, as per SEBI, when a company is going for issuing public, when a company is going for public issue, the company has to present financial statements as per Ind AS. For that, the company has to prepare restated financial statements. Of course, restated financial statements, which may be general purpose only, because the prospectus is being issued to so many, yes or no. But there, for restatement, SEBI has given certain guidelines. SEBI has given certain guidelines on restatement of financial statements, all that. Now, if at all a law and regulation set up guidelines for preparing financial statements, by default, those guidelines we presume acceptable. See, the point here is what? Suppose if a company prepare financial statements as per specific user requirement, and the user is not a standard setting body, and the user is not a particular law and regulatory authority, we'll generally get a doubt, whether this requirement is correct or all that. But if a standard setting body or authorized organization, if they give a framework, we assume that is proper framework because they're competent body. If a law and regulation give a framework for special purpose financials, we by default assume that that's a proper framework. Sometimes what happens, if financial reporting standards, and moreover they are supplemented by legislative requirement, you need to check for conflict. Suppose if there is a standard setting body which also gives special purpose rules, and law and regulation also gives special purpose rules, and the company has to prepare special purpose financial statements as per third party requirement, if at all conflict is there, auditor has to take prescribed action if conflict exists. Remember, the most important focus point is we only think about user, not the law, not so and so standard setting body. Are a user request? Tell me, special purpose financials, is it mandatory for a company to prepare every year? No. Special purpose, only when there is a special purpose we will prepare. Otherwise, why the hell we will prepare? That's it. The framework also sometimes maybe because of a contract. In our example right now, we are discussing bank loan related contract. So here the company preparing special purpose financial statements as per the requirement of the banker. Now in that case, whether the framework, the company prepared financials using the banker's requirement, right? Whether the framework is acceptable or not, acceptability is decided by attributes of the acceptable special purpose. Whether the framework shows attributes. Attributes means what? Importance of each attribute is determined by auditor's professional judgment. Very simple. Banker told one of the main attribute, sir, prepare on cash basis. Banker told inventory valuation use weighted average. Banker only told, sir, machineries and all please depreciate using WDV. Banker only told furniture buildings and all depreciate on SLM basis. These are all various attributes of special purpose financial statements. Which attribute is most important? Whether the financial statements are prepared as per that attribute or not, that I need to decide based on my professional judgment. Very simple. Sir, the company prepared special purpose financial statements. Whether the special purpose financial statements prepared by the company using some rules and regulations, is it acceptable or not, I need to check. Only when they are acceptable, I will accept the audit of that special purpose financials. If at all the framework is not acceptable, I will not. When do I say financial reporting framework is acceptable? What are the factors I will see? Financial information needs of the user is the most important factor. Applicable financial reporting framework from standard setting body, any law and regulation or body. If there is a conflict, I need to resolve the conflict, or if there is a framework in provisions of a contract, that I will see, and I need to apply professional judgment. What are the important attributes in the special purpose financial statements? That's it. And finally, suppose you decided, yes sir, the financial reporting framework is acceptable. Now proceed audit. Now plan and perform the audit. Now here you can comply with 200 all the ethical requirements including independence. Remember, this is an assurance engagement. Audit of special purpose financial statements is an assurance engagement. First of all, whatever the works that we do, right, we broadly divide the works into two types. All the engagements, assurance engagement, non-assurance engagement. Correct? Assurance engagement is again two types. On historical financial information, other than historical financial information. On historical financial information, we have two types: reasonable assurance, limited assurance. Reasonable assurance is called as audit, limited assurance is called as review. Other than historical financial information, if at all we are providing any assurance, we simply called as assurance engagement. Non-assurance is called as related services. Non-assurance is called as related services. Yes or no? Now audit standards, these are two set of standard, 200 series to 700 series. 35 standards we have, 3 standards we have which are dealing with 800 series. So this 800 series we are discussing now. Okay, now look at it. So when you are doing audit of special purpose financials, we need to comply with ethical requirements. We should also comply with all relevant standards on auditing here also. Now in special purpose financials, when I'm auditing, I need to determine materiality. I need to plan the audit. 300 planning principles I will use. I need to decide materiality. 320 I will have to do risk assessment. 315 I will use. I will have to obtain audit evidence. 500 I will use. I will have to get a third party confirmation. 505 I will use. Array, all the auditing standards I will use, man. When I am doing audit of special purpose financial statements, I will be using all the auditing standards. By the way, if at all you are feeling speed, reduce the watch speed. You will understand very clearly each and every of my word, because I'm pronouncing every word clearly, just that I'm going at a faster pace. That's it. Next, now remember, what are the special consideration? Some of the requirement of standards on auditing in an audit, okay, may require special consideration by the auditor. For example, 315 SA 315, the auditor should understand the entity, whether accounting policies are correctly selected and applied. For contract based financials, auditor must understand management interpretation of the contract. Suppose banker, no, he gave some methods of accounting. See how management is interpreting correctly or not. Sometimes no, an interpretation is significant. Why? Alternative interpretation is also possible, which has a material difference. Suppose banker told one method of valuation of inventory. That method, no, it has two implications. In two ways it can be done. Getting it? Two ways it can be implemented. Because of these two methods, the numbers will drastically differ. So auditor has to very carefully analyze. If at all financials are prepared as per provisions of a contract, whether interpretation is correctly done by the company or not to prepare the financials. And remember, 320 standard also we should apply. And remember, generally for general purpose financials, how to decide materiality? 320 standard will decide. But for special purpose financials, no, management may agree. Threshold, below which misstatement will not be considered. Management will agree with third party. In special purpose financials, materiality sometimes will be decided by third party. Just because existence of materiality by third party, just because third party decided, that does not relieve you to apply 320 requirement. Even if a third party decided, even a provisions of a contract decided materiality level already, you should still consider 320. You should also consider whether when you are performing the audit, you decide performance materiality as per 320, all that. Overall materiality third party would have told, but performance level and all you only decide. Revision of materiality you do as audit progresses. So materiality threshold. Sometimes in exam, no, they will only ask you regarding this. Write about special considerations for standards on auditing when you are planning and performing an audit. Application of some of the standards requirement is important. The auditor has to consider, for example, 315, 320, and 263 examples they give. 260 means what? Suppose, if you find some important issues in special purpose financials, you have to communicate significant matters to those charged with governance. And remember, sometimes, when for general purpose financials and special purpose financials, responsible party for those charged with governance may be different. Remember this point. In such a case, you should determine the appropriate person within the entity's governance structure to communicate. So who is the right person in the entity governance structure to communicate regarding special purpose financials? And one more point you should remember: the auditor for the company general purpose financials and the auditor for company special purpose financials might be different. That is also one more possibility. Yes or no? If at all top management is involved in managing the entity, who are the right people? You should please identify and communicate to them only accordingly. Then, when reporting on special purpose financials, please follow 700. I told you, remember, revised 700. This is the main amendment. This is the main amendment in the standard. And further, finally, description of applicable financial reporting framework. In the audit report, you should describe about what exact framework they followed. Generally, just now I showed you audit report at the beginning 800. We don't directly disclose about what framework they followed. We tell, we emphasize, we give an emphasis of matter para, where that para will highlight, a note point which is presented in the financial statement, special purpose financials, which contains basis for preparation. Look at. Revised 700 requires the auditor to evaluate what 700 standard says actually, whether financials are adequate at describing the framework. You see Tata Motors, you see State Bank of India, any financial statements, they will talk about basis for accounting. Same way, special purpose financial statements also shall talk about basis for accounting. In the notes to accounts, initial 3-4 points talk about basis for accounting only. Getting it? In case of contract based financials, significant interpretations must be disclosed. In case of the special purpose financials are prepared as per the contract, all the interpretations of the contract must be clearly disclosed in the financial statements itself. And in case of special purpose financials, the auditor report specifically should include what is the purpose for which the financials are prepared, who are the intended users, all that auditor. That's why how this auditor is including emphasis of matter paragraph auditor is using. There he is putting basis for accounting, restriction on distribution and usage, like that heading we saw. Yes. Further, key audit matters can be communicated. This is one amendment. Earlier 800, this point is not there. Now new 800 has this point. If you open and see 701 key audit matter, that is key audit matter applicability. If you see, key audit matter is applicable only for audit of complete set of general purpose financial statements, they will say. Whereas here 800 also talking about 701. Then why? In key audit matter is applicable only for audit of general purpose financial statement, that to complete set financial statements, right? Then how come 800 can contain SA 701 reference? You can use it, no problem. 800 standard says, if at all the auditor want to communicate key audit matter in the audit report on special purpose financial statements, no problem, you communicate. In such a case, SA 701 guidelines you follow, that will also apply. Same way, sometimes the company which prepared special purpose financials, along with special purpose financials, other information will also be given to the banker. Other information will also be given to the third party, at whose request special purpose financials are prepared. In such a case, auditor has a responsibility to read the financial statements and compare with other information and identify inconsistency. See, everywhere you discuss about audit reporting, 700, 720, I told you, first you should watch audit reporting chapter and then only you should watch specialized areas. If at all you have not understood 700 series correctly, believe me guys, 800 series is a nightmare for you. 2000 series is a nightmare for you. You can't understand 800, 2000, even 3000 series you can't understand properly. If at all you do not have auditing standards, especially 700 series knowledge. That's why whenever I always revise marathon, first I start with reporting, because that is a base for predominant standards understanding. Now, finally, other information. So SA 720, that is also applies when you're reporting on special purpose financials. The reports are designed for owners and stakeholders. whatever their annual reports. In case financials are prepared using special purpose framework, the users are who? Specific users for whom special purpose framework is designed. If they are given other information, auditor has to apply 720 related processes here also, and the auditor may include other matter para in the audit report on special purpose to refer to audit report on complete set. That is auditor's choice may include, you are giving audit report, right? For example, I showed you here audit report. You see here, there is no other matter paragraph. If auditor want to include other matter paragraph, he can include. Other matter paragraph, what he will talk about? He will talk about auditor's report given on the general purpose financial statements. For example, general purpose financial statements audit report contain modified opinion, and I want the specific user to compulsorily see that audit report also. How can I highlight? That is not something there in the financial statements. That is audit report I want to highlight. I already tell. If I want to talk about some other audit report, other matter paragraph is the base. Yes or no? In exam they will ask you, write about usage of other matter paragraph in the audit report on special purpose financial statements. The auditor may include, an MCQ might be given. It is optional only, not compulsory. MCQ might come. Is there any compulsory requirement for the auditor to include other matter paragraph? Not compulsory. But remember, emphasis of matter paragraph is generally compulsory. Emphasis of matter paragraph is generally compulsory. We will get it. Alerting readers. So alerting readers, what is the alert? Special purpose financials can be used only for the purpose for which they were prepared. Other than those that they were, other special purpose financials sometimes may be used by users for purpose other than the intended purpose. To avoid misunderstanding, auditor includes emphasis of matter paragraph in the report explaining that financials are based on special purpose may not be suitable for others. That's what I showed in the real audit report. Yes or no? This is illustration. You see, we draw attention to so and so. The financials are prepared to assess the company for special purpose, and this report is used only by them, should not be used by others. Alert paragraph. This is called as, what is this called as? Alert paragraph. And finally, SA 706 requires EOM paragraph to be placed in separate section of the audit report. That's why you see in this case they have presented it in a separate section in the audit report. That's it. So this is one amendment. Okay, this is one amendment. Sometimes special purpose financial statements are restricted for distribution and usage. Like, the special purpose financial statement should not be kept on a public domain. It is a private, confidential. In such a case, the auditor may indicate that auditor report is only for a specific user. Like, it is not available for restriction on distribution. The alert paragraph may be expanded to include a restriction on distribution. That's what you see. They did not simply alert emphasis. They did not simply say basis for accounting alone. They expanded. They expanded and included restriction on distribution and usage. So look at. So the alert paragraph may be expanded to include restrictions on distribution or use, where heading will be modified accordingly. That's why you see heading is given accordingly. I will show you one more illustration in the same ICAI book. Here you see emphasis of matter, basis for accounting. Where is restriction on distribution? Because in this particular circumstance, it is not restricted for distribution, it is not restricted for usage. Anybody can use it, but still, these financial statements are not suitable for other purpose. I need to alert paragraph. I need to tell the users this is not useful for somebody else. I need to tell that point. And if at all I want to say that this is only for so and so party's purpose, not for others, then that is called restriction for usage, restriction for distribution. That's it. The standard is completely over. Example of emphasis of matter para. I am telling you guys, this is high possibility. 800, if at all a question comes, this is the high possibility. A 5 marks or 4 marks question will come. Write about restriction on distribution or use for audit of special purpose financial statements. So they may ask you like this one specifically. So that's it. 805 is over. Now, what are the possible questions in exam? Write about alerting readers that the special purpose financials are prepared as per special purpose framework. A 4 marks question on this might come. Or they may ask you, write about description of applicable financial reporting framework in case of audit report on special purpose financial statements. That they may ask you. Or they may ask you, what are the special considerations for standards on auditing when audit of special purpose financials are being done. This point you need to write 4, 5, 6 points you need to write. A 5 marks question might come. Or They might ask you what are the considerations when accepting an audit of special purpose financial statements, or finally they may ask you what is the meaning of special purpose framework and what is the scope, forming an opinion and reporting on financials. Here no, earlier used to have other than IFC will be there. Now that IFC other than is removed. That's it. SA 800 is over. That's it. I think I have given you enough clarity on 800. That's it. Now straight away let's continue SA 805. SA 805. Let's begin 805. Just 2 minutes. Okay, just 2 minutes. I will begin 805. I'll just have water, and I'll be very happy if you give your comment or something. Invested a lot of time. You read once again, you just listen once again the standard, read the standard 800, then listen once again. You see the clarity that you will get. Yes. What is 805? Audit of single financial statement and element. More specifically, you see, I have used a shortcut here in the heading, but in exam when you're writing, you should always write full forms. Just 1 minute. You should always write full forms when you're writing in exam. What is the shortcut I used? Single financial SFSE. What does it mean? SFSE means, you see, yes, F, yes, E. E means actually specific element. Though I highlighted only E, it's actually specific element. Single financial statement and specific element. What does it mean? Very simple. Suppose a company prepared for some special requirement purpose, they prepared only cash flow statement, and they requested you to audit the cash flow statement and give a report on that. Purely cash flow statement audit, not complete set financial statements audit. Single financial statement audit only they requested you. Now this cash flow statement, they might prepare using general purpose framework, or they might prepare using special purpose framework. Generally we all know cash flow statement we prepare using indirect method. Suppose here company prepared cash flow statement using direct method for some banker requirement. Getting it? Then the cash flow statement is prepared as per specific user requirement. In such a case, special purpose framework is followed. 800 also apply. Which means if a company prepared a single financial statement or account or item of a financial, remember, single financial statement or specific element account item. Specific element itself includes account. Specific element itself includes item. Even though the heading specific element to account to item of the financials, like that heading is there. Audit of single financial statement, specific element, comma, account or item of the financials. Even the heading is there, specific element itself means account. Specific elements itself means item. Please remember that. Now, okay, sir. Yes, sir. Okay. They are auditing. Yeah, they are auditing a single financial statement. So, yeah, what is it exactly? If at all the single financial statement is prepared using general purpose framework, just apply 805 directly. Proceed. 200 series to 700, what are all applicable? Apply. And 805 apply. Suppose if the single financial statement or the specific element is prepared using a specific requirement of a third party, not general purpose framework, a special purpose framework is used to prepare single financial statement or specific element, then 800 requirement also apply. Now, you know what exactly most important point in this particular standard? First of all, what is a single financial statement? Single financial statement is something which is different from complete set financials. In this particular 805 standard, we use something called SFSE. Single financial statement and specific element. We also use something called complete set of financial statements, CSFS. What does it mean? Complete set of financial statements. That is one more word which we will use in this particular standard. Now, so for example, a cash flow statement is considered as a single financial statement, or sometimes in the standard audit of single financial statement, comma, specific element. You may be auditing only a specific element also. What do you mean by audit of specific element? The term element, what is it? The term element of financial statement refers to an element, a particular account or a particular item of the financials. For example, trade receivables or cash and bank balances, liabilities for claims incurred but not reported, net tangible assets, disbursement in relation to lease property, externally managed assets and incomes of a private pension plan. In exam they might ask you, what do you mean by specific element in light of 805? Give you examples directly. A 3 marks question can come, and descriptive. Getting it? Specific element means this. Now most challenging part is what, in this particular standard, it's not actually challenging. The most important point that you should understand is what, acceptance. Can you accept considerations? Like if at all you got a request from a client, sir, you need to do single financial statement audit or specific element audit, what you need to consider? Can you blindly accept? You need to consider certain elements. Only after considering various elements you can accept it. Most important element is practicability. Suppose a client is asking me to do audit of reserves and surplus. He requested me to do audit of reserves and surplus. Client is thinking, our reserves and surplus, only 4-5 items are there inside that: capital reserve, revenue reserve, revaluation reserves, P&L surplus, only 4 or 5 items is there. Auditor will hardly take 2 days time, he will audit and then give a report, he thought. But reserves and surplus has one account, sub account. P&L balance is there. P&L, if at all I have to tell whether reserves and surplus is true and fair. The client asked me whether reserves and surplus is true and fair or not, he's asking me. I have to then verify whether P&L balance is true and fair. If I have to verify P&L balance is true and fair, I need to do P&L audit. If I have to do P&L audit, I need to do sales audit, purchase audit, income audit, expense audit. Oh my God. If I have to do sales audit and expense audit, I need to first understand entity and its environment. Sometimes a company might think it's only a specific element, but doing audit of that specific element requires enormous effort from the auditor's side. So especially this difficulty is when, I am not the auditor of complete set. First, suppose, the company approached me specifically for specific element audit or single financial statement audit, where I am not their general auditor. I am not the auditor of complete set. Especially the time I must determine whether audit of single financial statement or element is practicable or not. Remember, most important principle being a chartered accountant is, whenever you are auditing a specific element, single financial, special purpose financials, general purpose financials, complete set financials, your fundamental duty is to comply with all the relevant auditing standards. If a company is asking you to do a specific element audit, see whether you can comply with all the relevant standards on auditing or not. Is it practicable? Moreover, you are not the routine auditor of the company for complete set. You are not the complete set auditor. You are specifically asked for single financial statement and specific element audit. See whether all the standards on auditing can be complied or not. Further, auditor must comply with ethical requirements and all the relevant standards on auditing, including independence. The auditor must comply with each standard unless a particular essay is not at all relevant. Okay, and especially if auditor is the one who is not audited complete set, you may lack knowledge of the entity and environment. Internal controls you may not have. You may not have the evidence about general quality of accounting, how qualitative entity accounting records. You generally will not have evidence on that. As a result, auditor may require additional evidences to support or verify evidence from the accounting records. Sometimes audit work will be disproportionate to the element. Company thinks it is just a reserves and surplus, but you know how much background work you need to do. Some SES may require audit work that seems disproportionate. For example, the company is asking me to do only balance sheet audit and then give opinion. Whether balance sheet, balance sheet contains fixed assets at historical cost. A company can show balance sheet fixed assets at historical cost only when going concern is proper, which means I have to verify going concern also. So yes, example, SA 570 may be impracticable for small element audit like accounts receivable. Getting it? For example, fixed assets audit. A company prepared a statement of fixed asset and they want me to audit that and then give an opinion. Statement of fixed assets, some values they shown, impairment, everything they shown. All these values will have some relevance only when going concern is there. So even though I may audit fixed assets only, but 570 requirement I need to comply, which is very difficult for me. So if audit of single financial statement and specific element is impracticable, in our book, wherever single financial statement and specific element is used, guys, whoever is following this particular GOAT notes, especially, please do not write shortcuts in exam. If an audit of single financial statement and specific element is impracticable, please discuss with management and see whether any other type of engagement is possible, or increasing the scope of the audit, or increasing the duration of audit, and then tell the management and do the audit accordingly. So considerations for accepting, considerations when you are accepting a single financial statement or specific element audit. Most importantly, SA 200 says all the relevant standards you have to apply. Even when you're doing single financial statement audit or specific element, all the standards will apply. This applies even if you're not the auditor of complete set. So when you're not auditing complete set, practicability is the biggest question, and you should comply with ethical requirements. You should also, and especially if you're not engaged to complete set, you generally lack understanding of the entity. You does not have evidence about quality of accounting records, because of which additional corroborative evidences and all you should obtain. And some SAs, no, they may require you to work, you to get evidences which is disproportionate to what you're auditing. Yes or no? If at all SFSU audit is impracticable, like, doing this alone is not possible within 2 days. If the client is asking 2 days, doing this is impractical as per the client requirement. You discuss with management and see, increase the scope of engagement, or see whether any other type of engagement is possible or not. Now by the way, okay sir, fine, I accepted the engagement. Before even accepting, I consider all this. One more thing what I consider, acceptability of the framework. Sir, they prepared single financial statement, cash flow, or they prepared a balance sheet, or they prepared a specific element using some requirements of a particular contract they prepared. Now you need to see whether the framework which they used for preparing single financial statement and specific element, right, some rules and regulations they followed and prepared, right, how far they are acceptable. See, what is the requirement? First of all, why are they preparing single financial statement? Why are they preparing specific element? Some third party requirement. See, what is he requiring exactly? That is the basis. So SA 210, no, the standard 210 says you need to determine acceptability of, you need to determine acceptability of financial reporting framework which is used in preparing special purpose, preparing the financials. In case of single financial statement and specific element, auditor must check whether the framework followed enables adequate disclosures to help intended users understand the information correctly conveyed. The effect of material transactions events on the information conveyed. See that in case of single financial statement and specific element, see whether the financial statement prepared, is it addressing the user needs or not. That you need to check. Sometimes, no, even the management prepared single financial statement and specific element, right, that single financial statement and specific element may follow a framework established by some authorized standard setting organization. So if at all an authorized standard setting organization framework is followed, check that. Okay, the auditor checks if framework include all relevant requirements for adequate disclosure and presentation. See that single financial statement they prepared along with notes, right? Specific element they prepared along with notes, right? By the way guys, notes to accounts is a byproduct for everything. Whether it's a single financial statement, notes will be there. Specific element also, notes will be there. By default, notes will be there everywhere. Yes or no? So see whether the notes to accounts contain clear disclosure of all framework related guidelines. Now, considerations when planning the engagement. What are the considerations? But before this, no, I will directly go to forms of opinion. In the number 24 exam, they asked this question. You know which question they asked in number 24? The 16th point. In our book, this is 16th point. This is most important in this particular standard. In fact, I should have started with this actually, but it's okay, no problem at all. Just a minute. You see here, forming of an opinion. Come to concept number F in 805, reporting considerations. Inside that come to 16th point. Okay, very simple. First, let us understand reporting aspect of 805. Then we will discuss about remaining elements of 805. For example, we are auditing single financial statement or specific element. Now we need to give an audit report. When we are giving audit report, suppose you obtained evidence that single financial statement is correctly prepared, everything is true and fair, or it is prepared as per the provisions of a contract, which may be a fair presentation framework or which may be compliance framework. The single financial statement is prepared as per the framework, the specific element is prepared as per the framework, everything is rightly done. Okay, very good, you give opinion on that, no problem. Now my question is, which opinion auditor should give? Can an auditor give an opinion on, very simple. Let me show you this one. For example, no. For example, just a minute. For example, no. Complete set of the financial statements. It contains a modified opinion. it contains a modified opinion. For example, or else let me be more clear, even though, you know, audit report on complete set financial statements. This audit report, no, either I gave or some other auditor would have been given. It doesn't matter. Audit report on complete set financial statements. It contains case number 1, qualified opinion or emphasis of matter paragraph or material uncertainty related to going concern, or other matter paragraph or other information para as per 720. The audit report on complete set contains this additional data. Now you are giving audit report on single financial statement and element, right? What is your reporting responsibility? You see what the standard says. For example, if the auditor's report on complete set financial statements includes a modified opinion, emphasis or other matter, material uncertainty related to going concern, or just a minute, material uncertainty related to going concern, just 1 minute, it is just loading. Yes, material uncertainty related to going concern or uncorrected material misstatement of other information. For example, other information is materially misstated which is not yet rectified. That point is there in the general purpose financial statements audit report or complete set financial statements audit report. This point is highlighted by the auditor. Then auditor shall consider, which auditor? Auditor of single financial statement and specific element. He shall consider implications of that. These implications are the right, that these implications, what is the impact of them on single financial statement or specific element, and auditors report thereon. Generally what we do, we are giving audit report on single financial statement and specific element, right? In this audit report we highlight other matter paragraph. Inside this other matter paragraph we tell the third party, please, dear third party, please refer to audit report on complete set of the financial statements which contains qualified opinion, emphasis, other matter, something. Remember, here some modified opinion is what you need to consider. Its impact, especially if the modified opinion is adverse or disclaimer. That is even more severe. If at all audit report on complete set of the financial statements, the auditor gave adverse opinion or disclaimer of opinion, what about him? Can he give unqualified opinion on single financial statement? This is the question exactly asked. This is the question which is exactly asked in the number 24 exam. This is what which is asked for 5 marks question in number 24 exam. By the way, with respect to this, there is no amendment at all. And if you recollect, in 705 revision also I told one point. Considerations. When auditor gave adverse opinion or disclaimer of opinion on the complete set, what are the considerations, additional consideration? I told one point. Emphasis of matter paragraph shall not be used, like that I told. That point here I'm now going to once again touch. Very simple. Suppose, if audit report on complete set contains a modified opinion or qualified opinion, modified, let us use the word modified of this. What is its impact on single financial statements you should consider? What is its impact if you feel this modification is some very important reason and you felt that third party for whom we prepared single financial statement and specific element, third party must and should read this. Then in the other matter paragraph, especially if it is a qualified or these points, I can highlight, I can tell them to refer that audit report also. Suppose no, on complete set financial statements, audit report contains adverse opinion or disclaimer of opinion. What is the situation? Now tell me, okay, complete set financial statements related audit report contains adverse or disclaimer. Okay, I agree. Now you are giving audit report, no? On what? Are you giving audit report on specific element? Are you giving audit report on specific element? Or are you giving audit report on single financial statement? If at all you are giving audit report on single financial statement, you should also give adverse opinion or disclaimer of opinion as it is. Sir, this is complete set financial statements audit. This is an audit report. That's a different engagement. Here we are doing audit of single financial statement, which is also different engagement. If at all complete set financial statements auditor gave adverse opinion, should I also give adverse opinion here? Yes. Because single financial statements by default assumed as major item of the complete set. On the complete set financials, single financial statement is assumed as a major item. Look at this. Now look at this. Just a minute. Look at this. The auditor shall not express unmodified opinion on single financials. Don't express unmodified opinion. Even sorry, okay, fine. I mean, okay, fine, it's okay, no problem. If at all adverse opinion or disclaimer of opinion is there on the complete set, because single financial statement is considered as a major portion. Once again we will come back and read this. After finishing this, then you will understand this word, even word, why they used even word. I mean, first you need to understand this situation. Sir, actually no, complete set financial statements audit report contains adverse opinion. I agree. But sir, what is the reason for adverse opinion? Investments of the company were substantially materially misstated. So auditor gave adverse opinion. But actually, right now we are doing specific element which is fixed assets, sir. Right now the company called me to give audit report on specific element which is talking about fixed asset. Previously complete set financial statements contains adverse opinion. I agree, sir. The complete set financial statements auditor said they are not at all true and fair. I saw basis for adverse opinion section, sir. What auditor told, investments is materially misstated and pervasively misstated. He didn't talk about fixed assets, sir. Now can I give on fixed assets unqualified opinion? Because it's a separate audit report, it's a separate engagement, it's not the same report. It's a separate audit, separate report we are giving. That we are giving on fixed assets. Earlier audit report contains adverse opinion on investments. That is the reason why adverse opinion is given. The adverse opinion is not dealing with this specific element, sir. Can I give now unqualified opinion on this specific element? Yes. 3 conditions. What are the conditions? 3 conditions. When auditor expresses adverse opinion or disclaimer of opinion on complete set financials, but he is considering it appropriate to express unmodified opinion on a specific element, this is allowed only if 3 conditions are satisfied. This is what number 24 exam question. The auditor is first of all not prohibited by law. There is no prohibition in law. For example, actually there is no prohibition. Okay. And unmodified opinion is expressed in audit report that is not published together with audit report containing. Okay, now we are giving unmodified opinion in the audit report on single element, specific element, right? This audit report and specific element should not be published along with complete set financial statements and that audit report where adverse opinion is there. That audit report, this audit report don't publish together. Why? If at all both are published together, one auditor is saying adverse opinion, everything is bad, and this auditor is saying this is true and fair. Which one to believe? Public will have confusion unnecessarily. And most important condition, specific element does not constitute major portion. The specific element on which you want to give unqualified opinion, right, in a separate audit report, that is not a major item. For example, sir, actually I am not, this is actually what unmodified opinion on single element. More importantly, better than single element, I will use the word specific element. Here I am giving an audit report on specific element only. So if can I give, very simple, complete set financial statements auditor's report contains adverse opinion disclaimer. Can I give an unqualified opinion on the specific element here? Yes. 3 conditions. This is not prohibited. This audit report and thus audit report is not published together. Remember, this is a separate report you are giving which is not published along with it, and the specific element is not a major item. I understood, sir. Sir, but actually here, no, in this case, no, it's a single financial statement, sir, not a specific element. Now I am giving an audit report on single financial statement, sir. What about this? Here, if at all you are giving an audit report on single financial statement, the standard straight away says, the auditor shall not express unmodified opinion on single financial statements if it is not, even though you are not publishing together. Sir, we are not publishing, even though single financial statement is considered major portion, or if specific element is considered as a major portion, if single financial statement or specific element is considered as a major portion, then on that you should not give unmodified opinion if at all the complete set financial statements auditor's report contains adverse or disclaimer of opinion. This is the most important observation, getting it. That's it. Further, so by the way, this point is what, adverse opinion disclaimer. This point you see, when auditor expresses adverse or disclaimer of opinion on the complete set financials, you see this point I'm highlighting now in yellow. In the same audit report, SA 705 does not allow auditor to include unmodified opinion on a single financial statement or specific element. What does this mean, sir? This is very simple. That's what 705 I told. For example, I gave adverse opinion on the financial statements in complete set. And I'm highlighting one thing called emphasis of matter, and I'm saying that balance sheet is true and fair, not permitted. Trade receivable is true and fair, not permitted. Are you getting it? If you are giving adverse opinion on the complete set financial statements or disclaimer of opinion on the complete set financials in the same audit report regarding one specific element in that complete set or a single financial statement in that complete set, you should not give unmodified opinion in the same audit report. That is what they're saying. Sir, what if I'm giving a separate audit report, sir? If it is separate audit report on specific element, yeah, you can give unmodified opinion. Even complete set financial statements contains adverse opinion. In a marathon, I cannot talk beyond this because it's taking so much time already. Yes, that's it. Almost 805 is almost over. Main theme of the 805 is over. Now, forming of an opinion. What is there in the forming of an opinion? Here, when you are forming opinion, you follow 700 guidelines only. When you are forming an opinion, 700 talks about how to form an opinion. There are some evaluations to be made in 700. Same evaluations here also you make. And here also you are required to apply reporting requirement of other standards if at all applicable. And the auditor must ensure that single financials or specific element provide proper disclosure to the intended users for understanding material effects of the all that. SA 570 also you apply. Yes or no? Key audit matter. Sir, in a single financial statement, can I give a key audit matter? Actually, key audit matter applicability is for complete set only. No. Can I use 701 here also? You can use. No problem. Guidelines you use, man. No problem at all. For audits of listed entries, 700 requires communication of key audit matter, which is in line with 701 for general purpose financials. The key audit matter, if at all you want to use here also, you can use here also. No problem. 720, for example, no, along with single financial statement prepared by the company, specific element prepared by the company, along with the single financial statement specific element, company is also giving some other information. That time you should apply 720 procedure. And auditor signature. Audit report on single financial statement must be signed by either the auditor or engagement partner. Must include membership number and firm registration number. Must include membership number and firm registration number. Then most important, you see here, this in exam straight away they can ask. This in exam they can ask you 7th and 8th point. Write about they'll ask you a case study. Write about consideration of implication of matters included in the audit report on complete set financial statements when reporting on. Write about consideration of implications on matters in audit report on complete set financial statements while reporting on audit report on single financial statement specific element. Like that they will ask you. This involves professional judgment whether a matter is relevant. Suppose on complete set financial statements audit report contains modified opinion, emphasis of matter, other matter para, material uncertainty, other information. Whether are they impacting single financial statement audit, specific element audit, you should consider professional judgment. There are some factors here you can use. What is the nature of the matter in the audit report on complete set? What kind of matter it is exactly? How severe it is? Is it relating to this specific element? Check out. Okay, how it relates to single financial statement that you are auditing and specific element that you are auditing. What is the pervasiveness of the matter in the complete set and what is its impact on the single financial statements, and the difference in periods between complete financials and single complete set of the financials are prepared for 1 year, whereas single financial statement here is prepared for 3 months, 1 quarter only. That also you see. And what is the time lapse? Complete set financial statements is prepared almost 4 months ago for 24-25 year or 23-24. Right now we are preparing single financial statement for 23-24 only, but after 1 year we are preparing. So whether that incident is relevant now or not, check out. For example, suppose the auditor gave a qualification on trade receivable in complete set financial statements related one. It likely impact single financial statement and specific element relating to accounts receivable. Suppose if I'm auditing accounts receivable only, auditor also gave a qualified opinion on account receivable, it highly impacts. For example, I am doing audit of statement of P&L, or I am doing receivables audit. In a single financial statement, P&L audit I am doing, or I am doing trade receivable audit. But whereas on complete set financials, on long term loan there is a qualification that least impacts. So even when matters from complete set audit report do not affect the single financial, auditor may include them in other matter paragraph. I told you, remember. So, sir, audit report on complete set financial statements contain so many information, sir, modified opinion, all that. In single financial statement specific element, that report is going to be given to some banker or somebody, sir. It is better we tell them to refer that also, right? Yes, better. So, auditor may consider necessary to refer about complete set financial statements related audit report. Where you will refer? Other matter paragraph. That's it. Other matter paragraph of which audit report? Single financial statement specific element related audit report will be there, right? Inside that other matter paragraph. That's it. And for audit of both single financials and complete set, the auditor should give separate report. That already we saw. And remember, single financial statement element must be differentiated from complete set financials. If single financial is presented with complete set, suppose if a banker is given complete set as well as single financials together, see that both are differentiated adequately. Yes or no? The auditor must differentiate the opinion clearly and don't issue the report until the differentiation is made. Most important, they may ask you in exam, implications of matter. Write about implications of matter in the audit report on complete set financial statements on the audit report to be given on single financial statement and specific element. That's it. That's it. Next, almost predominant standard is over. Form of opinion, whether it's a fair presentation framework, a compliance framework, how are you preparing single financials, at whose instance you are preparing single financial specific element, they will decide what is the framework. Okay. So what is the factors? Can I give audit report on single financials or specific element under fair presentation framework? Can I give an audit report like that? For that, no. Whether framework explicitly talks about complete set, very simple. Single financials you are preparing, right? Only P&L. Are you preparing using only the same schedule 3? Check out. Same reporting requirements, check out. If so, you may use fair. You may consider it as a fair presentation framework. Whether single financials or specific element, are they complying fully requirement of that framework? Whether are they including necessary disclosures, fair presentation disclosures? Whether are they disclosing beyond requirement of the framework? Just a minute. Are they disclosing, are they providing disclosures beyond requirement of the framework? Check out, like a single financial statement, management is giving additional disclosures for fair better understanding. So give it, see that whether departure from framework is permitted so that fair presentation can be achieved. When you're preparing single financial specific element, banker gave certain rules. You can deviate the rules also if at all they are not true and fair. If at all deviation is permitted for achieving fair presentation, then you can use which form of opinion, present fairly, true and fair words and all can be used. That's it. Then actually in our fast track and regular batch, we discuss so in depth all the fair presentations, all that at beginning we discuss, and in audit report this actually 800 series we discuss almost for 8 hours here. 6.5 to 8 hours we will be discussing, 6.5 7 hours or 8 hours we will be discussing. So big topic, this is not a small ordinary, but I'm trying my level best to give you clarity in the revision marathon. Okay, now finally, when you're planning and performing audit of single financial statement and specific element, getting it, all relevant standards must be adapted. The auditor need to determine who is the right person in the governance structure to communicate regarding single financials, because for complete set financials and single financial statement, the responsible people in the organization may be different. Similar point in 800 also we saw. Who is responsible person and those charged with governance regarding special purpose financials, they may be different from complete set financial statements. And sometimes, if at all I am only audited complete set financials, I can happily use the evidence obtained there even for single financial statements audit. When auditing single financials alongside complete set, the auditor can use evidence obtained from complete set also. However, you must still get evidence for specific element that you are auditing clearly. Okay. Now further, most important, when you're auditing single financials and specific element, If at all there is any interrelated item also you must audit. That's why I told reserves and surplus. Company appointed you for reserves and surplus audit. You should give whether reserves and surplus are true and fair or not. You should give opinion. P&L you should audit accordingly. So individual financials which are part of complete set, many elements are interrelated. So audit of single financials element cannot be considered in isolation. The auditor need to perform verification of interrelated items also. So when you're doing audit of single financial statement or when you're doing audit of specific element, interrelated items also you must consider. Then materiality, obviously materiality determined for single financial statements generally be lower than complete set. This will affect the audit procedure and evaluation of uncorrected misstatements. Absolutely one of the most important point. Materiality level for complete set is different. Materiality level for a specific element is different. Generally for a specific element and single financial statement, materiality level can be lower than the complete set financial statements, especially if the specific element audit, materiality level will be lower. That's it. So the standard is over. So what the standard is briefly talking about, getting it, it is talking about what is a single. By the way, remember, if a single financial statement or specific element is prepared using a special purpose framework, then 800 also applies. That's it. Okay. And 800 does not apply. Sorry, 805 does not apply to reports from component auditors. If you remember 600 standard, when I'm telling you, the principal auditor can ask a component auditor for supplementary procedures to be performed by component auditor on some specific elements. Just because principal auditor is asking other auditor to perform on some areas of work, we cannot straight away call it as 805 engagement. Is it 805 engagement? No. When do we say it's an 805 engagement? A client requested you to do audit of specific element or single financials and give a specific report on it to the client, so that the report will be given to some third party. Then only 805 apply. Suppose if principal auditor is asking component auditor, dear component auditor, can you verify inventory and then give me a just a statement on it? That cannot be called as 805 engagement. That's still 600 part of it. It is part of 600. I told this point in 600. Please go and see. Supplementary audit, supplementary test requested by principal auditor to component auditor. There I told you. That's it. 805 is also completed. Okay, then 810. Now we'll go to 810. Engagements to report on summary financial statements. I hope 800, 805 you are having superb clarity. I hope so. Okay, now we will discuss about engagements to report on summary financial statements. 2 minutes. Okay, I'll just have water. I hope your clarity has been enhanced substantially by me now. Please listen once again, you will get more clarity. Yeah, we'll continue. Engagements to report on summary financial statements. In summary financial statements, directly first thing that we need to understand is, first of all, it's, you see, it's not, they didn't say audit of summary financials. 805, 800, you see, audit of financial statements prepared using special purpose framework, specific considerations. 805, you see, audit of single financial statement, or just a minute. Yeah. So audit of single financial statement or specific element, item or account of the financial statement. Here you see, they're not using the word audit of summary financial statements. They are only talking about reporting on summary financials. Who should report on this? The same auditor who did complete set financial statements audit. Who has done complete set financial statements audit? The same auditor only can give report on summary financials. Sir, a company exclusively called me to report on summary financials, sir. I didn't audit the complete set. Their auditor is different. I should not accept the engagement at all. Simple. Look at what is a summary financial statement. Summary financial statements reflect same historical financials only, which are derived from audited financials. In this standard, no, they use SFS and AFS word. SFS means summary financials, AFS means audited financials, which can also be called as main financials, from where summary is drawn. Summary financial statements also reflect historical, derived from main audited financials, but with less detail. But remember, the summary financials also provide structured representation of entity resources and obligations at a point in time or changes during the time. Different laws may use different terminology to describe these summary financials. For example, abridged financials, condensed financials, summary financials, different laws and regulations will give different meanings to it. Summary financial statements is very popular in US. Okay, it is not popular in India, it is very popular in US. Okay, in India also there are some companies which prepare summary financials, but remember, summary financial statements are not prepared as per general purpose framework. Basically, sorry, summary financial statements are not prepared as per GAAP. I mean, under GAAP there is no requirement for summary financials. Now, by the way, these summary financial statements, they may be a summary of general purpose financial statement, or they may be a summary of special purpose financial statements. Anything it can be. Suppose a company prepared special purpose financials, from that a summary can be prepared. A company prepared general purpose financial, summary can be prepared. For example, a foreign holding company which has a subsidiary across various countries, or our Indian company has some subsidiaries across some 100 countries. Now we want to verify, financial statements of those countries. Are those financial statements, are each financial statement is 100 pages, 150 pages. Management don't have that much time, so they may ask these foreign companies, subsidiaries, please prepare summary financials and send me. Now when they're sending summary financials, whether the summary financials are correctly derived, whether they are correctly derived from the original financials. See, original financials or audited, audit report is there, so I know whether original financials are accurate or not. By reading audit report I can understand. Summary financials they prepared, because of my request they prepared summary. Whether the summary financials are also correctly reflecting main information of audited financials, I don't know. So I asked the same company, look, you give me summary financials, also give an audit report on that. So I don't want to blindly believe on summary financials. I know main financials are audited. Whether main financials are true and fair or not, audit report I will see and I will get an idea. Summary financials, how do I know whether they are right or not? I know summary is a derivation from main financials. They are just a derivative of main financials. You derived from main financials, but whether you derived correctly, whether summary financials are correctly given or not, how do I know? Moreover, summary financial statements, how to prepare? There is no accepted framework. Is there any criteria? The company will prepare summary financial statements. For example, tell me, how do we prepare general purpose financials for a normal manufacturing company? We use Schedule 3 criteria. Division 1, Division 2, Division 3, some criteria we use. There is an applicable criteria here. Established criteria is there. For summary financials, is there any established criteria? No. Management only developed. What exact summary? What should be the content of summary financial statements? How summary balance sheet should look like? Summary P&L, how it should look like? What points will be there in the notes to accounts? Summary cash flow. The formats and all, management only designed. So I need to be very careful whether summary financial statements are reflecting key summary, important summary of main financials. I need to understand whether summary financial statements will give me a clear picture. Most important, summary financial statements are never a substitute for audited financials. You should not read summary financial statement isolated. That point also the standard tells you. Now look at the auditor should accept an engagement to report on summary financials only when he audited the main financial statements from where summary financial statements are derived. If an auditor who has not audited summary financials, main financials, and if at all you are exclusively called to report on summary, you generally will not have understanding whether summary financials are correctly reflecting everything, because you didn't audit the main financial statements. Able to understand. Next. So what is the requirement? Why this requirement? Without auditing main financials, you will lack knowledge to report on summary. Therefore, don't report on summary financials if at all you didn't audit main financials. So before accepting the engagement, what auditor has to do? Here, they may ask you both the questions. while accepting an engagement, what are the points auditor has to, you were requested to report on summary financial statements. What are the points auditor has to take into account while conveying acceptance on summary? You can accept only if you audited the main financials. Determine acceptability of criteria. Okay, summary financials prepared. You only prepared, you only audited complete set financial statements. From there only summary financial statements are prepared. See on what basis they were prepared, which criteria they used, see whether the criteria is acceptable or not. Get an acknowledgement from management that they are responsible for summary financial statements. Agree with management what form of opinion to be expressed on summary financial statements. Here we don't give any opinion whether they are true and fair or not true and fair, like that. Unmodified, qualified, no, we don't give all that. Straight away I will show you on summary financial statements. Wait, how we give opinion on summary financial statements? Very simple. Two scenarios we will divide. Audit report on summary financial statements. Summary financials, how do we give? For example, by the way, I will report on summary financials only when I am the one who reported on audited financials. Only then I will give report on summary financials. Suppose I verified summary financials, I accepted the engagement, I verified summary financials, and you know what, summary financial statements are consistent with audited financial statements. They're matching. Summary financial statements are reflecting array without compromising the quality. Suppose you are following a flowchart material or short notes material. So right now you are following my goat notes. You compare with ICAI material. Our goat notes is a fair summary of ICAI material. You just compare with ICAI material, you will feel entire ICAI material points are covered here. Entire that content is covered intact without compromising the content. It's a fair summary of ICAI material, which is actually 1000 pages, whereas my material is 360 pages. Getting it? So summary financial statements are consistent. After you verified, you felt that summary financial statements are consistent with audited. If they are consistent with audited financials, which opinion you should give on summary financial statements? Unmodified opinion. Directly unmodified opinion. Most importantly, unqualified opinion, clean opinion, where you will say yes, summary financial statements are consistent with audited financials. That is one way you can give opinion. Second way, summary financial statements are a fair summary of audited financials. Like that also you can talk. Any of these two phrases you can use. When summary financial statements are consistent with audited financials, auditor's opinion can draw like this. Yes, summary financial statements are a fair summary of audited financials. Summary financial statements are consistent with audited financials. Any of these two wordings you can use. Suppose summary financial statements are not consistent with audited financial statements. By the way, guys, this is not yet completed. Only one part of it I told. Look at the second part. Suppose company prepared summary financials. They are not matching audited financials. Audited financials have more details. There is so much of, for example, audited financial statements has trade receivable, where the breakup is given clearly, where 90% of trade receivables are more than 3 years outstanding, overdue. But in summary financials, they presented trade receivables less than 6 months, more than 6 months. 90% of trade receivables they classified under more than 6 months. Actually, more than 3 years is nothing but more than 6 months. More than 6 months includes more than 3 years also. But when I say in the balance sheet or notes to accounts, trade receivables are outstanding for more than 3 years, trade receivables are outstanding for more than 6 months, both of them will they give same perception to the user? Are more than 6 months, we think okay, 6 months crossed. More than 3 years means, oh my god, 3 years are outstanding. Audited financial statements contains trade receivable more than 3 years. Like this, many items are there in the audited financials like this, but summary financial statements are cleverly, they're hiding it. Summary financial statements are not reflecting fair summary of audited financials. Summary financial statements are not consistent with audited. I will straight away give adverse opinion on summary financial statements. Don't believe summary financials. I will straight away tell summary financial statements are not consistent with audited financial statements. I will straight away give adverse opinion. That's it. Sir, summary financials, they are prepared consistently with audited financial. Whatever is there in the audited financials, the matter exactly neatly presented in summary, sir, without compromising quality. Now tell me which opinion I should give. It depends upon It depends upon on audited financial statements which opinion you gave. Sir, on audited financials, no, we gave unqualified opinions, sir, or we gave qualified opinions, sir, or we have emphasis of matter paragraph, other matter paragraph, other information para, material uncertainty related to going concern, that and all were there, sir, on audited financial statements. Okay, we gave unqualified, qualified. That is one scenario. Another scenario, sir, on audited financials, no, we gave adverse opinion, or the auditor gave a disclaimer of opinion on audited financial statements. Then what you should do, on summary financial statements, do not express opinion. Do not express opinion right away. Sir, audited financials were there. I am the one who audited. I gave adverse opinion on them, like they are not at all true and fair. Or I gave a disclaimer that no, I did not audit at all. I did not audit, so I'm unable to give opinion. Now company is asking me to give an opinion and report on summary financials also. What should I do? Don't give opinion. Array, main financials itself is wrong here. What about the summary? There is no use about the summary. Summary financials are useless because main financials itself is wrong. That financial statement summary only this is right. Main itself is wrong, man. Summary should not be used by anybody. So don't give opinion at all. Don't unnecessarily give an opinion and give an assumption to the user that they can use this. Don't let users use summary financial statements if at all the summary financials are derived from audited financials which contains adverse opinion or disclaimer of opinion. So this is a reporting requirement under 810. Sir, audited financials, it contains unqualified opinions or qualified opinion, emphasis, other matter, all that. Well, then what about this? Then you can say summary financial statements are consistent with audited financials. You can give that, no problem at all. And also draw attention to qualified opinion, adverse, qualified opinion, emphasis of matter, other matter, material uncertainty related to going concern, other information, uncorrected material misstatement in the audit report on summary financial statements. Say that they are matching, say that they are consistent, say that they are present fairly. You will give unqualified opinion on summary financial statements, like you say that they are consistent with audited financials. And also draw attention to auditor's report on complete set financial statements. I will show you summary financial statements related audit reports. For example, so this is audit report on summary financial statements. So big actually. 5 illustrations were there here. Just a minute. So there are 5 illustrations here. You see here 5 illustrations. Report of independent auditor on summary financial statements. Opinion. Straight away. In our opinion, the accompanying summary financials are fair summary of audited. So he said a positive opinion. The summary are matching with audited. What is the summary? The summary financials, no, they do not contain all the details. So the summary financials and audited financials do not reflect. The summary financial statements, even subsequent events, all that is fine. The audited financial statements and our report thereon, specific heading the auditor is keeping. You see, this is like an emphasis of matter paragraph. Summary financials, see, you see how audit report, first we are talking about opinion on summary financials, then you are explaining what is exactly summary, then you are explaining about audited financials and what report you gave on that. We expressed unmodified opinion, material uncertainty point is there in our audit report, and key audit matters we communicated in our audit report. Please go through that. Indirectly we are communicating to shareholders, indirectly we are communicating to the user who is getting this audit report on summary financials. Look, audited financial statements contains audit report. Inside that key audit matter is there, emphasis of matter is there, going concern point is there. Please go and see that. And auditor responsibility, our responsibility is to express opinion whether summary financials are a fair summary or not, yes or no. And here I should very clearly tell, look at this, what I'm highlighting. Reading summary financial statements audit report is not, you see this, is not, I'm just highlighting, is not a substitute for reading audited financials. Please, reading summary financials and this audit report is not a substitute for reading main financials and the audit report. You should read main financials also. This is only complementary in nature, not a substitute in nature. Getting it? I should alert like this. Suppose no, adverse opinion is expressed on audited financials. Now what it is? report on summary financials when auditor gave adverse opinion on main financials. Denial of opinion. I will not give opinion on summary. Why? Why, sir? What happened? Summary financials are correctly prepared now as per audited. I know they are correctly prepared, but audited financials itself is wrong. Something, the source itself is wrong, that is something not reliable, and you are preparing a shortcut material which is from irrelevant source. What is the point of talking about this? Exactly. Okay. So the summary financial statements, getting it as a result of adverse opinion on audited financials, it is inappropriate to express opinion on summary financial statements. The summary financial statements do not contain all the disclosures, audited financial statements and our report thereon, and management responsibility. So what are the contents of audit report on summary financial statements? Let's go to contents of audit report on summary financial statements. First go to this, let's go to contents of audit report on summary financial statements. Where is it? Yes, here. Audit report on summary financials. This is also modified. Yeah, by the way, 810, what is the amendment? This only the amendment. First, title, mention that it's a report on summary financials. Addressee, mention. First, identify summary financials. Yes or no? They identified. Then identify audited financials. Sir, what is identifying summary financials or audited financials? Here you see the summary financials are so and so, audited financials are so and so. Summary financials are derived from audited financials. Identification of summary and identification of audited. Then opinion they are giving, actually you see here. Then opinion, clear expression of opinion. Then you should give a disclosure statement regarding, you should give a disclosure statement in the same opinion section. Then you should talk about reference to, wait a minute. Then you should talk about reference to audited financial statements, then management responsibility, then audit responsibility, then signature of the auditor. You see this? Yes or no? The same format is followed, right? Opinion, here itself they're talking summary financials, all that, and here itself they're talking about subsequent events. Then summary financial statements means what? Audited financials and audit report means what? Then management responsibility, then auditor responsibility. Arey, who said auditing is a theory subject and boring subject? People made like that. You studied like that. You see the illustrations and then read this, you get fantastic clarity. Imagine in a revision class itself I'm giving this kind of clarity. Imagine my 7.5 8 hours discussion of this chapter in a faster regular batch. The kind of clarity, you don't get just clarity, you command it in a different way. By the way, I'm not promoting about my course, I'm just telling you what level of clarity and what level of dedication with which I teach the class and what kind of knowledge the student gets. I'm telling you, please tell your juniors, while selecting an audit faculty, select the right faculty who can give the right subject. I will solve in the class, we solve this, we discuss different types of MCQs, how it can come, we solve in the classroom how different ways these questions can be asked. And we also solve our question bank, wonderful question bank, which consists of 700 questions. Some repetitions will be there, pakka 650 questions will be there. Fine, anyhow. Now look at this. So, yes, that's it. Now look at this. Reporting. This is what the most important part of the standard. Summary financials are consistent with audited. Okay, first I will come back to it later. First I will see the second part of the reporting requirement. Just a minute. Suppose summary financials are inconsistent with audited. Directly we will give adverse opinion. The auditor will adverse opinion, will express adverse opinion. I will show you that example also. Next page is only this only. This one you see. Adverse opinion on summary. When, because of significance matter, the accompanying summary financials are not a fair summary. Adverse opinion. If summary financials are not matching with audited, we straight away give adverse opinion. Okay. So, for example, sir, summary financials are matching, sir. Now what to do? Suppose summary financials matching. What opinion on audited financials auditor gave? Qualified opinion he gave. In such a case, auditor report on audited financials includes a qualified opinion or emphasis of matter para or other matter para or MUC or MU, material uncertainty para, key audit matter or 720 related uncorrected MMS in other information discussion is there in audit report. and summary financials are matching with audited financials, or they are a fair summary of audited financials as per applicable criteria, then auditor report on summary financial statement state that auditor report on AFS includes qualified opinion and describe the basis for qualified opinion, all that. Where you will describe this, I showed you illustration, audited financial statements or audit report there on, like this I'll put a separate heading, there I will talk about our qualified opinion, everything I'll talk. Suppose adverse opinion or disclaimer of opinion is given on audited financials, the audit report on summary financial statement shall state that audited report on AFS contains adverse or disclaimer and describe the basis for adverse and disclaimer and state that because of adverse opinion on audited financials, it is inappropriate to express an opinion on summary. So denial of opinion on summary financial statements. That's it. Now let's understand the remaining parts. Restrictions on distribution. Sometimes no, summary financials might be restricted for distribution. That time you will use alert paragraph, just like in 800. Emphasis of matter paragraph, you will use draw attention to criteria based upon which summary financials are prepared. And restriction on distribution usage. If auditor report on audited financials has restricted, distribution or alert users, that statements are prepared as per special purpose. Yeah, most important point. Suppose summary financial statements are derived from complete set financials audited, which are special purpose framework. If at all main financials are special purpose framework, naturally it will have an alert paragraph, right? Restriction for distribution and usage. Summary financial statements also should have alert paragraph. If main financial statements related audit report has an alert paragraph regarding restriction on distribution and usage, summary financial statements related audit report should also have restriction on distribution and usage. That's it. Comparatives. If at all, summary financial statements also contains comparatives, 710 comparative related will apply. Suppose along with summary, unaudited supplementary information is presented. Supplementary information requirement I already discussed in 700. Please, just a minute. Please go back to 700 and come back and then read this. Next. Just a minute. My next session onwards, I will use my Mac system only. Okay, I'm using Windows system for convenience purpose, but somehow this is not working correctly, this particular app. Okay, fine. So finally, sir, summary financial statements are given. Summary financial statements are given in a particular document, sir. Okay, the auditor must read the document containing summary. Other information, this is nothing but other information. 720 requirement. If auditor identify inconsistency, tell the management all that. Now auditor association. Sometimes no, company will give summary financials along with main financials, and summary financials they were not reported on that, we didn't report, but company might tell others that auditor has already reported on that. What auditor has to do, see whether audit report is also included or not. Audit report is not included in the document where summary financials are given, request the company to include the audit report on summary financials because you gave a report. Suppose management is refusing to report, take appropriate action. Suppose auditor is not engaged, suppose you did not engage at all, summary financials you did not report at all, see that management is referring your name only in the context of audited financials, they are not using your name in the summary financial statements context. Suppose if management is not behaving like this, okay, take appropriate action. That's it, take appropriate action to prevent. So this is the theme, just listen 1 second, you will understand. Next, what about subsequent events? Audited financial statements, they were approved on 10th May 2025. For example, 2025 only, let us assume. Whereas summary financial statements were approved on 10th June 2025. Do we need to cover subsequent events between this? Not at all. Summary is just derived from this, no? So when you are giving audit report on summary financial statements, you should tell the people that events occurring after original audit report date is there, right? 10th May. We didn't cover that in summary financial statements also, because this, remember, this is a summary of that only, yeah. Just because you are preparing summary financials at a later date, subsequent event definition will not apply. Remember, are we auditing summary financials separately? We are only verifying them whether they are as per audited financials. That's what. Able to understand? That is what this point is mainly talking. In exam they will ask you, write about timing and events subsequent to the date of audit report on audited financials and what is its impact on summary financial statements. They may ask you this. In exam they may ask you, write about auditors association on summary financial statements. They may ask you 5 marks question on this directly. Or in exam, write about information, other information in the document containing summary financials. They may ask you a 5 marks question on this. Or they may ask you comparatives, 3 marks question. Unaudited supplementary information, 3 marks question. Both together they might ask you. And most important in this, reporting when summary financial statements are consistent. This is what most important. And they may also talk about date of audit report. What is the date of audit report on summary financials? The date of audit report on summary financials shall not be earlier than the date of audit report on audited financial statements. Yes or no? It should not be earlier than the original audit report date. Summary financials audit report date shall be later than the original audit report date. Not only that, summary financials related audit report date must be later than management approval of the summary financial statements date. That's it. Okay, this itself they can ask you as a 3 marks question. That's it. In our actual class, no, we discuss all this. That's it. Form of opinion. How you can give any of the two, any one of the following you can use. Yes, summary financials are consistent. This way you can tell. Or summary financials are a fair summary. Like this also you can tell. Any one is permitted. Sometimes no, law discusses about what opinion wordings to be used. If at all law related wordings if I am using, no. If at all it is giving confusion to the reader, no. See whether additional explanation is required. Give additional explanation so that your opinion will not be misunderstood by others. Suppose if additional explanation cannot avoid misunderstanding or cannot mitigate, do not accept the engagement to report on summary financial statements. Next. Most importantly, write about nature of this is most important process. What you should do on summary, what procedures? First, no, you should check summary financials. Are they clearly disclosing that they are summary? They should not pretend like they are main. When summary financials are not accompanied by main financials, evaluate whether they are describing. Summary financials should clearly tell from where people can access audited financials. And summary financial statement should clearly disclose applied criteria. Auditor will compare summary financials and with main financials whether they are agreeing or not. We will recalculate numbers, all that, and I will see whether summary financials are prepared in accordance with applied criteria. You see, here they are talking about disclosure of applied criteria. Here they are talking about disclosure. Here they are talking about compliance, whether applied criteria is properly followed or not, and whether consider purpose of summary financials, why summary is prepared, and whether summary financials are clearly addressing that purpose or not. Availability, make sure that those who are given summary financials were also made available to audited financial statements. That's it. Management responsibility. Sometimes in exam they'll ask you, write about management responsibilities for summary financials, 5 marks question. They will give you like a case study and then give this question. So that's it. So what is applicable criteria? Generally criteria, if authorized standard setting body is there, you can accept it happily. If at all there is no established criteria, management will develop the criteria. Suppose no, if summary financials are prepared using some framework which is unacceptable completely, do not accept that engagement. Suppose if law makes it mandatory for you, sir, criteria is not correct, sir, but SEBI says I need to report, then do not state that 810, do not use about 810 discussion. Terms of engagement should clearly mention that fact. Then that's it. Acceptability of criteria. Before accepting the engagement, the auditor check whether criteria is acceptable. This itself can be asked as a 5 marks question. See, there are many possibilities of questions from this particular standard. There is an increased risk that summary financials will be more misleading if there is no established criteria. So whether criteria is acceptable or not depends upon nature of the entity, why the summary financials are prepared, what is the information need of the user for whose purpose we are preparing summary financials, whether the criteria will ensure, or whatever the criteria company is following, will it ensure summary financials are not misleading? Check out. That's it. In exam they will ask you a 3 marks question on factors determining acceptability of applied criteria. What are the factors? Nature of the entity, purpose of the financials, information needs, criteria, whether it is misleading or not. That's it. 810 is also completed within 1 hour 45 minutes. Almost only 800, 805, 810 put together, approximately less than 2 hours we finished. With I can tell you, I think I can openly tell you, I don't know how many of you have seen my earlier regular or faster class, I don't know, but if at all you're watching me for the first time this particular topic, I can confidently tell you, you have got more clarity than before you have on these 3 standards. I bet I am right on this. That's it. We'll continue next topic in the next continuation. Okay, that's it. We'll close this particular session. And by the way, I hope you enjoyed thoroughly this 800 series. By the way, first 700 series, 12 standards I covered in reporting. So if at all you're watching a merged video of this, first to finish remaining first 700, then come to these timestamps. That's it. Okay, so next we'll be discussing about 4000 series, 2000 series, 3000 series. That's it. Then I'll be discussing ethics. Then I'll be discussing NBFC audit and bank audit.